GM, good morning. Welcome to the Milk Road Show. We're like your favorite pair of jeans, comfortable, reliable, and always there when you need us. I'm Jay Hamilton, and today we're joined by Yano, aka Jason Yanowitz, the founder of Blockworks, to break down the Coinbase State of Crypto Summit that happened last week, which Yano, you wrote an awesome thread sharing all your thoughts. We had to bring you onto the show this week to share it with everybody at Milk Road. Welcome to the podcast, Yano. Great to have you.
Appreciate you, man. Good to be here.
Okay, let's set the scene for us. What is the Coinbase State of Crypto Summit? Who's there? Give us a picture of it.
Yeah, so Coinbase State of Crypto Summit, this is the second year that they've done it. It was a one-day event at Casa Cipriani, which if you are familiar with New York highbrow venues, it's probably the classiest place that you could host it in all of New York. You get the invite. First off, getting the invite, they're not selling tickets to this thing. There are no sponsors. It's an invite-only event. There were 600 attendees, mix of policymakers, regulators, institutions, and founders in crypto. Really clean, like just very classy one-day event. And yeah, it was phenomenal. It was great.
It's a real who's who of not just the on-chain side and the crypto world. It actually appears to me to be more of a who's who of who's not here yet as well, which is what got me really excited. It feels like there's a lot of the large institutions and brands who maybe are here, but we don't even know they're here, sort of like, Google. We talk about them a little bit, but we don't really know what they're up to. Is that the feeling you got?
Yeah, very much so. I mean, I ended up having lunch with Rich Widman at Google, who runs Google's crypto team, and just blown away by actually how much Google is doing in crypto. We can talk about that if you're interested. But it was definitely the first panel kicks off with, it's called Beyond Bitcoin ETFs. What's next on the institutional roadmap? It was the CFO, Alicia Haas, the CFO of Coinbase, and Samara Cohen from BlackRock. And Samara, for those who don't recognize the name, is the CIO, Chief Investment Officer of their entire index and ETF business, right? She controls more capital on Wall Street than, I don't know, there's probably 10 people who control more capital than her in the world. So yeah, Samara, there were some other phenomenal conversations about the CIO perspective was a really good one. This was Bitwise, T. Rowe Price, Coinbase Sebastian, who runs Coinbase Asset Management, and then the Teachers Retirement System of Texas, which is one of the largest endowments, one of the largest pensions in the world. So really, really interesting. There was a conversation on payments with PayPal, EY, Google, OpenAI, and St. Jude's. So yeah, all in all, some phenomenal conversations.
After you've attended this event and you've had a chance a weekend to sort of digest all the incredible panels, what would you say are your main takeaways? What did you really come out of this? And maybe actually, before I ask what your takeaways are, what was the sentiment like? Give us a vibe check on how the sentiment was there and how everybody was feeling.
Sentiment was extremely high, and it is probably, I actually think this was one of the biggest, I hate the word alpha, but alpha things is just seeing the conversations in person and how starkly contrasted they are with the conversations on crypto Twitter. I do feel like the conversations on crypto Twitter right now are kind of they're a little dark, and people are kind of upset by the meme coin stuff or celebrities or whatever it is, and feels like we're talking in circles and talking past each other. That was very much not the sentiment in person. A lot of excitement in person, and my co-founder and I were just talking about this. The last time I can remember the discrepancy between what I'd call the in-person vibes versus the online vibes. The last time I can remember it being this strong is probably the 2019 market. It's kind of what it felt like ending 2019. At that time, Binance IEOs were going on. There was a lot of just despair on Twitter. But people in person were really excited about what was coming, and DeFi was actually happening behind the scenes, and Uniswap had just gotten built, but it wasn't really people weren't talking about it. So anyways, the vibes were really high, and it was great. But yeah, I can talk takeaways. I've got a few takeaways for you if you want them.
Yeah, let's jump into takeaways.
First takeaway going in was I thought the conversation was going to be the institutions are here. The institutions are very much here. We've got BlackRock on stage and these CIOs and these big pensions and endowments speaking at this event. And I think on Twitter, that's the conversation as well. The institutions are here, right? We finally have Bitcoin ETF. It's looking more and more likely that we'll have an Ethereum ETF before we know it. The takeaway from some of the actual institutions was the institutions are definitely not here yet. They are definitely not here yet, which I think led to a lot of excitement and gave me some excitement for what the next 12 months could look like. And if you actually want to put some data around it, Samara from BlackRock and then Kathy Wood from ARK both said a nearly identical quote related to both of their ETFs. So the ARK Invest Bitcoin ETF as well as the BlackRock ETF, both of them said this number 80%. And 80% is an important number. They said 80% of their Bitcoin ETF volume right now is being driven by self-directed investors buying through their own brokerages. You see all this, like, we set record flows. I think it was net inflows of $12 billion for the Bitcoin ETFs, right? In 3 months, fastest growing in history. That is individuals like, I don't know, your mom or dad or something, like, who have been scared to buy Bitcoin on Coinbase. And now that it's in their Fidelity account, they can just buy through their brokerage. So 80% of if you think, like, let's take a round number, $10 billion, 8 of the $10 billion is being driven by, they don't like their word retail, I also learned, but self-directed investors. That is the first big takeaway, I think. That also trickled down into RIAs and financial advisors, right? RIAs control 40% of the wealth in the United States. Financial advisors and RIAs, 40% of the wealth in the United States. They're still recommending, there's a lot of them are still not even recommending putting it in the portfolio because the wirehouses have not turned on Bitcoin, the Bitcoin ETF yet. So you can maybe buy it directly in your brokerage, but through the wirehouses, you can't yet. So the financial advisors are still a little bit worried and are still a little bit wary. So that was probably my first big takeaway, is just that it's nice to say the institutions are here because it feels good to say, but yeah, there's still a massive blue sky opportunity and a huge amount of white space, I think, coming from from the institutional crowd.
I mean, that's super exciting to hear. Like, the fact that we have achieved the fastest growing ETF ever in history, and it's been done by, I gotta say, I don't like the term self-directed investors. It's been done by retail investors. Like, that's wild that this is, I think we all thought, I remember reading Matt Hogan's tweet, who I know was also at this summit and spoke as well. I remember reading his tweet like a few months ago where he said, oh, 3% is the new 1%. And I'm sure you'll bring up that 1% to some people are even talking up to 10% now. But I remember when I read that, I was like, okay, then financial advisors must be here. Those are the types of people who do that type of allocation, who say, hey, you should have 1% of your portfolio in Bitcoin or whatever it might be. But if it's all just like, it feels like to me, like it's all I don't even think it's our parents or anything like that. I feel like it's the Robinhood users of the world, the Betterment users. It's the people who have learned how to invest themselves and have access using these great fintech tools. And now they're just saying, yeah, hey, I'm going to throw a little bit into Bitcoin because I read about Bitcoin, I've heard about it, and I guess I've seen it enough times now that I trust it. So the fact that I don't know if you like, can we put that can we quantify that somehow? Like, how many trillions of dollars is that could be coming?
Yeah, I don't know. I think there's two big trends that are happening right now. So there's one trend, which is the institutional crowd, which, I don't know, trillions, right? There's another trend, which Brett Tagepool, the head of institutional business at Coinbase, actually started. He opened up the event with this. So everyone's focused on the institutions. He said, look, the institutions are exciting. We'll talk about them. That's great. The other big number is 70 trillion. 70 trillion is the amount of money that's going to move hands in the next decade or two from this older generation to a younger generation. That's $70 trillion, right? Is moving from maybe boomers into the hands of millennials and Gen Z. And if you actually survey that, like Coinbase has done, if you talk to those people, Gen Z and millennials, 90% of them are disillusioned with the financial system. So you've got $70 trillion of wealth moving into the hands of a group of people where 90% of them are disillusioned with the financial system. I think it was Brian, maybe someone else. There was a consumer panel that was great as well. And they said, look, in the future, you're not going to use a bank account. You're not going to have a bank account. Your bank account's just going to be in your phone. Your phone will be synonymous with your bank account, which will be synonymous with a wallet, right? It's all one and the same. It's not this. You're not going to go open up a Bank of America account if you're a 16-year-old today.
It's so wild to think of. So we got first takeaway, almost like a bit of like, who's coming. There's a lot of people, not just institutions. Institutions aren't here. They're coming. Financial advisors aren't even really recommending this yet. And this youth movement is, I shouldn't say youth movement, but this movement of wealth from the old to the young that is happening is also, they're already here, I would say, a lot of them, but if they're not here, they're more likely to come. As you said, so many people will grow up without a bank account. We had Pomp on the podcast maybe a month ago, and he had this great analogy about time. And he just said, he was like, the thing you got to understand is we just need more time, because right now there's a 15-year-old who was born with Bitcoin. 15 years from now, there's going to be 30-year-olds who are born with just Bitcoin, and it's all they'll know. 100 years from now, nobody will remember the gold standard. It'll just be Bitcoin. And it's so true when you break it down that simply. Okay, so first takeaway, there's a lot of exciting movement coming our way. Second takeaway?
And the last stat I'd put on that is from a regulatory perspective, it was the BlackRock, the Samara from BlackRock, and the CFO of Coinbase said they think regulatory clarity will push institutional capital from being comfortable with 1% of their portfolio in Bitcoin and crypto to 5 to 10%. So they said there's a lot of their clients who are sidelined because of the lack of regulatory clarity. Anyway, so takeaway number one I would have for you is institutions are dabbling, but they're not as here as people think they are. So that's first takeaway.
Any idea? Let me just any idea when they're coming? I remember one stat that you had was about how everybody had a working group, a dog, I think it was called a
Digital Asset
DAW.
Working Group. Yeah. Yeah. Sebastian from Coinbase. So Sebastian's actually ex-Olympian rower, but also head of the Coinbase asset management team. He said, look, we've got a second chance at the institutions. Institutions meaning the real LPs, not just the funds, but the real LPs, the pensions, the endowments, the sovereigns, the insurance groups. So we got a real second chance at them. It's not happening in 2024. It will happen in 25. Takeaway number two that I'd have for you is learning about Coinbase's strategy. I was actually surprised by how open Brian was. So takeaway number two is around Coinbase's business and the future of Coinbase. So Brian said the three most exciting things at Coinbase right now. One, Base. So Base, I'm sure most Milk Road listeners know, but Base is the L2 that Coinbase has been building. So that is the single most exciting thing at the company right now. It's not their trading platform. It's not the exchange. It's not their prime brokerage business. It's not their custody business, which custody is 1/3 of the top 100 hedge funds actually in the US, which is a crazy stat. It is Base. He also said number two and number three most exciting things are their derivatives business and then their smart wallet, which makes onboarding a whole lot easier. So if you think about the three things that the CEO of the largest crypto company, maybe outside of Binance in the world, is excited about, it's Base and a smart wallet, and then derivatives obviously, but Base and a smart wallet, right? And that is just like, it kind of this event lined up with Coinbase's big marketing push around like on-chain summer and moving things on chain. And that was a big theme of the event, which we'll talk about in the third takeaway, is just like, yeah, just how much is actually happening on chain. And then the natural question in the room was like, well, what does this do for your business? And the craziest quote of the day was Brian saying, and I quote, "Centralized exchanges will be great for a bit, but they're just a moment in time. It's all going to be peer-to-peer with no intermediaries and all on chain." So you're saying that you're going to get disrupted. And it was a pretty remarkable quote. And he said, look, all Coinbase products are going to eventually move on chain. So I just thought the reason that's so important is it all trickles down, right? What Coinbase is a $50+ billion public company, or whatever their market cap is today. That then trickles down into what other fintechs are doing. It trickles down into what other crypto companies are doing. If you look at the Series D or Series E companies like a Circle or a Kraken, they're paying attention to what Coinbase is doing. So it all trickles down. So Coinbase making this huge push on chain is, I think, indicative of what's going to come in the next 12 to 24 months from other brands.
It's just incredible to hear a CEO saying he's basically going to disrupt his own business. Like he's saying, hey, we have this incredible business that's working very well. And I got to say, kudos to him, because I agree. I don't know. Do you agree? I think centralized exchanges, they also
I agree as well.
Long-term place here. We need them right now. So they serve a great purpose, and they will continue for a while. But it makes me more bullish on Coinbase and the future that they see, because he's not missing the forest through the trees here.
Money and the flow of money ends up, it's like water, right? It flows to the path of least resistance. And right now, centralized exchanges and the current system is actually the path of least resistance. It's I find it much easier to use Venmo than to do something on chain. But as things like smart wallets come out and account abstraction and other things, like that system then becomes the path of least resistance for that capital to flow.
Yeah, we talked about the smart wallet was it last week or the week before? Can't remember. Time in crypto is so difficult to keep track of, and wrote about it in our wallet, in our newsletter as well, because it is such a big launch that they've done. So super excited about that. Next, let's move on to the next takeaway, unless there's anything else from Coinbase.
The last piece from Brian that I would just say is that for the first time ever, international business grew faster than the U.S. business. So international grew faster than U.S. in Q1, and he said the last piece of this big puzzle for us is international expansion. Today, it's 17% of the revenue at Coinbase. He expects it to continue to get much larger. Actually, he said their strategy, they've actually hand selected 10 markets to go into. They call them internally the go deep markets, and they're doing a full force blitz. It's reminded me a lot of when, like Uber, if you ever hear the early stories of Uber, like they would just pick a market and just blitz the hell out of that market. It seems like Coinbase is about to do that with what they've said are 10 markets. So the last thing I'd say, last takeaway was, so for those who went last year, it was very focused on infrastructure, right? They were rolling out Base, and people were talking about Arbitrum and Optimism, and Solana was kind of picking up steam, but like it was still, I mean, summer of 23, like we were still just in that first phase of the bull market coming out of this like prolonged bear market. And it was all an infrastructure conversation last year. Everyone was talking about L1s and L2s and infrastructure. There was no mention of applications. This conference, there was really no infrastructure conversations. It was really all application conversations, and there were a couple really good conversations with There was a payments panel with Google and PayPal and St. Jude's. There was another like on-chain panel with Pleaser DAO and some other, and Coinbase's smart wallet and some other folks. So the third takeaway is like, it's, if you asked me 12 months ago, will this cycle be driven by applications? I would say no. I think I'm sorry. I know that people want that. I just think it's going to take too long, and that's probably a cycle after. But look, I was sitting there watching some of these panels, just thinking like, so much can happen in 12 months. And I think the number of conversations about applications has kind of flipped my thinking a little bit. And I do think I think we're probably halfway through the cycle right now. I think the second half of the cycle will be driven by applications. And I think there's only so much blood you can squeeze from the stone. And this, like, the infrastructure stone has been squeezed pretty dry. And I think it's at this point, like, probably the most overhyped part of the industry. And so you're starting to see like Coinbase's Base, you're probably like Telegram's blockchain, like places where like they have users and they have distribution. Like that's going to lead to this whole, I think the first real like application hype cycle in crypto, which I feel very excited about.
Was there any conversation about what those applications are, or even the categories that they fit into?
I think the conversations, there are the skeuomorphic ideas, right? It's like put the Uber on the blockchain type of thing, where it's like, yeah, let's take this existing idea and move it on chain. And we tried that a lot in 2017. There were all these ideas. We tried doing it in 2017. We tried it again in the last cycle as well. But I think the thesis there is like, now maybe we have better infrastructure so we can do it. I don't like those. I'm not that excited about those. What I think is cool and interesting is the completely new stuff that can come from crypto. And the way I think that my mental model works on this is, there was no way to predict Uber or Snapchat until you got camera on the phone and a GPS embedded inside of the phone, right? Only once you had a GPS embedded in the side of the phone could you get maps, and only once you had maps could you get Uber. And I think that's right now where like there's some skeuomorphic conversations happening, but I think we're trying to push into the more creative, unique. I think there'll be some marketplaces that get unlocked, like marketplaces that have just never been able to exist that can exist because of crypto rails. So that's what I'm trying to pay attention to right now.
It's so interesting. It's like you said, it's hard to predict because we don't know. And let's be real, everybody that's building is definitely building skeuomorphically right now. And you could argue, gaming is such a big sector that we've all been talking about for so long. Nobody's really figured it out yet. And mostly it's because they're trying to do it in a very skeuomorphic way. One thing that stood out to me is crypto's branding problem seemed to be brought up a few times. And in particular, the issue with the word RWA. Can you explain this to us?
Yeah, I've heard this from a few folks. So RWA, so actually this was brought up on nearly every uh, panel with someone in traditional capital markets. They said, look, crypto's got a branding problem. We all know that. People don't like crypto, FTX, SBF, all this stuff. That's fine. We'll move past that. They said we're really shooting ourselves in the foot. They said RWA, for example, is a term that is used every day in the traditional capital markets world. RWA means risk weighted assets, right? So when crypto people start saying real world assets, one, it implies that crypto assets aren't real and that we need these real assets over here. But two, it's like a new industry being created and saying like, yeah, like
Yeah.
S&P. It's like, so, we've already got an S&P. It's like we need a new thing. So risk weighted assets is a term that is the process that is used to determine the minimum amount of capital that a bank has to hold in relationship to the risk profile of all of its other assets, right? And that came after the regulations of like 2008, 2009 to reduce the risk of insolvency and protect depositors. So like RWAs is a big thing on Wall Street, and we've just kind of co-opted this term.
Like, they've already taken it, and we're just trying to take it. We're just trying to make it our own term.
And it's not a good thing to do. It's not a good. So they said you got to rebrand RWAs.
Any ideas of what we should call it instead?
Don't use the word real world because there are like it implies crypto assets are not real. I mean something around tokenizing seems like the thing that has caught on and has kind of gained acceptance with Wall Street. It's kind of like in 2018 and 19, like everyone hated the word crypto, but they like digital assets. It's like real world assets they don't like, but they like tokenization. So
Right. Okay. So tokenized assets or tokens, I don't know, something like that. I want you make me want to stop saying RWA, but I'm like, what do I say instead?
what do you say? Yeah, exactly. Yeah, we gotta have your. Don't you have a marketing agency? You guys got to work on this or something.
That's right. Yeah, we'll get them working on that. We'll put out a poll as well and see what the listeners think. Maybe we'll go back and forth on this on Twitter. Okay. Last question before we let you go. You teased at the beginning that you had a side conversation with Rich Weinman from Google. And in your post, you teased it very well. You said, "Damn, Google is up to some big things. I think people should take them more seriously." Can you share anything more about what they're up to?
Yeah, so I met with Rich. Rich is great. Everyone should go follow him on Twitter. Google has a large crypto team, and I don't think anybody realizes this. I remember when Google pushed into crypto about 2.5 years ago, and I said, "Look, it's just another big another big enterprise trying to take advantage of the crypto hype." And they now have I'm not sure I can say the exact number, the size of the team, but it's like it's a good dozens of people working on crypto inside of Google on one cohesive team, and they have three very distinct product lines. He has a P&L that he runs, and it's from the top. And he's got a directive, and he's building out these three different crypto products. I don't know if I can. I think I can. I don't want to overstep and say things I can't say, but like what I would say is like what Google. If you think about what Google is world class at, they're an infrastructure business and they're a data business, right? So I would expect to see Google push really heavily into essentially being a full stack data provider in crypto, whether that means the end user is someone like Blockworks Research, right? With our dashboards and getting our dashboard information from someone like Google instead of one of the other node providers, all the way to some of the traditional hedge funds, right? They are the data provider for someone like a CME group or one of the exchanges. Like when that exchange wants their crypto data, do you think they're going to go to Google or are they going to go to some API provider? They want to go to Google. So that's what I think we'll see Google push pretty heavily into.
It's still a lot of the base layer stuff, it's not consumer apps or anything that would.
Not consumer, but when you do things like running your own nodes and have validators and all that kind of stuff, you can do things like uh, Google. If you type in I think an ETH address right now or an ENS or something like that, like you can now search the Ethereum blockchain inside of Google search. So it allows you to do things that are more consumer facing because you have the whole data infrastructure.
Right. Which is a theme that you kind of keep bringing up, is like, we need the infrastructure in order to create new use cases, which are certainly coming. We'll see if they come in this cycle or in the next. But as you said, things move very fast. Yano, thank you so much for joining today's show. Before we let you go, where can people follow you online if they want to discuss what should we call RWA? Where can they join in the conversation?
Yeah, I'm on Twitter at Yano. People can DM me. My DMs are open. I've also got a little thing for Milk Road listeners or readers of the newsletter or whoever, if you want to send this to, which is we have a big conference that we host with the folks over at Bankless called Permissionless, which is October 9th through 11th. We've got like basically every founder of every L1, L2, Chris Dixon, Balaji, Novogratz, whole bunch of big people speaking. Milk Road should definitely be there. And if you want to save $50, there's a code, which is just MILK. So kept it simple for you guys. There's a code called MILK. So just Google Permissionless Conference and you guys can see it.
Right on. We'll throw a link in the show notes for that. Big fans of Blockworks and Bankless, good friends of us as well. So we'll definitely be there, and you guys should be there too. Yano, thanks so much for joining today. We'll hope we get you back on the show some point soon.
Appreciate you.
In case you missed it, Tether, the issuer of stablecoin USDT, the largest stablecoin in the world, is launching a new category of crypto assets called tethered assets. The first asset in this category is Alloy. That's ALLOY, goes by the ticker AUSDT. This is a token pegged to the US dollar and supported by physical gold held in Switzerland. Also, El Salvador has proposed a new Bank for Private Investment, BPI for short, which is designed specifically for crypto investors. Now, the bank would operate with fewer restrictions than traditional banks, allowing it to engage more freely with overseas entities and issue larger loans. It would cater to investors using both Bitcoin and USD, aiming to attract foreign investment and stimulate economic growth. The proposal still needs approval from El Salvador's legislature. That's all for today. Thanks for listening in, folks, and have yourself a wicked awesome day.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.